I'm John Kosar, Chief Market Strategist at Asbury Research. Thanks for listening to our latest Following the Money podcast. Today, I'll be talking about what our latest analysis and data-driven models are saying about current financial market conditions. That is, when to be on offense and looking for opportunities, and when to be on defense and protecting your capital. In our previous Following the Money with Asbury Research podcast on July the 2nd, we said that the internal health of the stock market, according to our Asbury 6 risk management model, was on a May 18th positive status. That positive status in the Asbury 6 remains intact, and the S&P 500 has since risen by 8%. We also said that our CEF model, which tracks the investor assets moving around the sector spider ETFs, was overweight communication services since May the 15th. Our model exited that position at the very end of last week for a 12% outright gain while outperforming the S&P 500 by 3%. By the way, Asbury Research is currently offering 10% off 3-month and 12-month research subscriptions through the month of July only through July. This includes access to all Asbury Research and data-driven models like the Asbury 6 and like the CEF model, plus free webinars where we teach you how to use our investment tools. Today is Sunday, July 18th, 2023. Now let's follow the money. Let's look at the broad market first. The October 2022 U.S. broad market uptrend remains intact but is becoming overextended according to a number of metrics, including investor sentiment and standard deviation. In addition, third quarter seasonality in the S&P 500 turns decidedly bearish beginning this upcoming week, and it warns that an overdue corrective decline could be beginning very soon. A negative shift in our currently positive Asbury 6 model would be seen as a key indication that a correction is beginning, so subscribers should be on the lookout for that. The Asbury 6 and all of our research and data-driven models are available to subscribers in our research center. Next, let's move to sector rotation. As we had mentioned earlier, our CEF model. CEF, by the way, is an acronym that stands for Sector ETF Asset Flows. That CEF model has exited its May 15 bullish overweight in communication services, as we stated. However, the model still maintains its May 1st overweight in technology, or XLK for the ticker. Since May the 1st, XLK has risen by 17% outright while outperforming the S&P 500 by 8%. Now let's move to domestic allocation, domestic asset allocation, I should say, via our CARP model. CARP is an acronym for Cross Asset Relative Performance. Our CARP model continues to favor growth, technology, and high beta stocks as overweights. It's actually favored growth and technology since the very beginning of the year. Growth has risen by 22% outright since first appearing in our model on January the 26th, while outperforming the S&P 500 by 10%. Technology, or QQQ is the ticker, has risen by 34% outright since first appearing as a buy overweight signal in the CARP model on January the 20th, and since then it has outperformed the S&P 500 by 18%. High beta, SPHB is that ticker, has risen by 14% outright since first appearing as a buy overweight in the CARP model on May the 18th, while at the same time outperforming the S&P 500 by 7%. Finally, let's move to global asset allocation via Asbury Research's U.S. versus the world model. There is not a lot that is going on there right now. We had a lot of opportunity to be overweight Western Europe in the last 4 months of last year. For the most part, the U.S. is outperforming the 24 different countries that are tracked by the model. The one that we're currently involved in right now, where there's a signal in the model, is Brazil. And Brazil remains on a May 5th buy overweight bias on the model and has since risen by 12% outright while outperforming the S&P 500 by 3%. So there it is, our latest bi-weekly Following the Money podcast for today, and a short synopsis of what we think is particularly important to pay attention to as we begin the third quarter. For more information about Asbury Research, including pricing on our premium research during our July sale period, just visit asburyresearch.com, go to the Contact tab, and enter your contact info and a brief note in the text box indicating your interest, and we will reply with the information you're looking for. If you'd rather just take advantage of our free stuff for now, make sure you subscribe to our Following the Money podcast right here on YouTube. Finally, the legal stuff. This podcast is provided for information purposes only and not intended to be a solicitation to buy or sell securities. The performance indicated from back testing or historical track record may not be typical of future performance. No inferences may be made and no guarantees of profitability are being stated by Asbury Research, LLC. The risk of loss in trading financial assets can be substantial. Therefore, you should carefully consider whether such trading is suitable for you in light of your financial condition.